the best way to build out this ecosystem, and I'm not even just talking about Bitcoin, I mean blockchain broadly speaking, other chains as well, is think about the infrastructure and make something that is roughly at par with what other verticals might offer. In the case of traditional finance, we're not going to reach the level and scale of Visa tomorrow, but try to get to somewhere that's somewhat comparable, and then really start building out the use cases, right? Because that's the moat Visa has, and that these different fintech companies has. It's not on some like absurdly revolutionary technology, although their technology stack is pretty impressive. It's mostly on the demand, right?
Here we are with the Rare Network podcast. We've got Jullian on from Marathon Digital Holdings. Really excited to have you on the podcast today. Before we dive into what you do in Marathon, how are you doing today?
I'm doing very well, Rand. Very happy to be on this podcast.
Awesome. Thanks for joining us. I'd love to, before we dive into Marathon, your background. Before we fired up the podcast, we were discussing some really cool stuff there. So what is kind of your background, educational upbringing, and like how'd you get into crypto?
Yeah, so I'm originally from Ecuador. I was born there. Left when I was 2, grew up mostly in Miami. But yeah, my background, it's eclectic. It spans everything from clean energy in China to fintech in Southeast Asia and US presidential campaigns. So kind of had my claws in all over the place. I'd say my biggest interest, though, is what can be done in the emerging world. I think that being from Latin America, it's certainly like a pretty important part of my identity, but something that brought me to crypto was the ability to disintermediate, and in particular to create payment networks and financial institutions that don't depend on local authorities, which in many parts of Latin America are really not entities you want to trust. And so, yeah, found my way into Marathon after a number of different ventures that I founded myself in the DeFi space. Now I lead product for a lot of interesting initiatives we have, most of which are sadly in stealth, but the generality is we are trying to really advance blockchain adoption, not just network security, but both how we use it and how we create this asset.
I love that. You said you originally came in, reverse from most people that come into Bitcoin. You've kind of come in through the Ethereum, Solana side. Like, how did you find crypto? Like, was it remittance payments you saw people making, and you were like, "There's got to be a better way"? Like, where did the aha moment come from for you?
Yeah, no, the aha moment was a strong one. I'm not going to lie, and I've had so many more aha moments getting closer and closer to the Bitcoin world. But for me,
Yeah.
I was working at a fintech company out of Hong Kong, and my big project was basically to expand a certain payment network we had to Indonesia. And I joined this fintech company in large part because I was interested in technology. I wanted to really, grind my chops into product management and to really understand the, meat and potatoes of how tech works. And I thought fintech was, the best place to go. I have a background in economics. I'm really interested in public policy. This is, the financial part of that, I guess. So it works, right? And what I ended up finding is most of the year that I spent at that fintech, my job was basically public policy. My task was understanding regulations and trying to navigate around those regulations to set up a product. It was actually very little technology. I'm embarrassed to say, but after a year of like product management, then I barely understood what an API was, right? So that should hopefully give you perspective, right, on fintech. And I don't know, for me, I guess it wasn't what I expected. I liked it. I enjoyed it. It was an amazing company and it was an amazing experience, but it wasn't tech. But I actually didn't know that at the time. I just kind of figured, tech is regulation. That's what are all those Google guys complaining about? And so anyway, I ended up leaving this company in large part because COVID policies in China became a little bit too much to handle. And so found myself basically, all right, what's the next thing I want to do? I love startups and I love, entrepreneurship generally speaking. And basically ended up finding a DeFi startup out of Dubai that was doing some cool things with co-ownership of bank accounts. The whole idea was to create like a better than business bank account. We started more on the retail side of like co-investing in NFTs, but then it became like, Web3 finance for institutions that are both crypto native and non-crypto native. And that's when I got the aha moment, because this was an Ethereum-based startup. They were using very simple smart contracts, but that's when I began to see, I said, wait, this is fintech. Like this is financial technology, not just like, public policy or in this case, regulatory navigation. There's a piece of technology that allows you to co-own assets. And for me, that was revolutionary. I know probably the listeners are like, dude, that's a multi-sig. What are you talking about? Well, to me, as somebody who was not very involved in technology and somebody who knows the developing world very well, multi-sigs are a pretty big deal. Like if you had more multis, if people understood how that works, think about it. In the traditional financial world, you can't own a bank account with somebody unless you're married to them. And in most parts of the world, it is not an individualistic, you own one account and that. No, most families co-mingle assets. That's how most families do, what friends do, what, you know what I mean? Like it's so common and it's so obvious. Businesses, exactly, right? And to be able to do that without a financial institution hovering over you, telling you no, that was pretty aha for me.
Yeah, I love that a lot. And then like, how did you find Bitcoin? Like what made you make the move to Bitcoin specifically?
Yeah, for Bitcoin, I'd say, so I had, it's actually funny, the startup that I had, well, two startups before I started at Marathon, I was basically creating a crypto savings account in Central Asia, in Kazakhstan in particular. Many explanations as to why a Hispanic kid from Ecuador found himself in Central Asia, but I'll save those for later. Long story short, as I was creating this crypto savings account, and the whole idea was to basically offer a product, an intuitive product to retail investors, retail savers that would allow them to save in USDC and earn yield via Aave. A super simple concept, I know, but for a lot of people, the front end for Aave actually isn't that intuitive. And it's funny, people say, oh, well, these DeFi protocols, they have millions poured into designers. They're very intuitive. No, they're not. If you talk to most people, they still have no clue how to navigate DeFi and they're scared of it. And so the idea was create a product people understand, savings accounts. Do it, denominate it in an asset that everybody wants, dollars, and earn any yield. Because by the way, in most parts of the world, savings accounts don't actually earn real yield, right? The interest rate might be 15%, but if inflation is 20%, you're losing your money on a year-over-year basis. That was the whole business model. And so, I did everything. I even got my now fiance involved and I got the whole team ready. And I was like, oh, we're going to go to market. This is perfect. This is a great idea. And then we start running focus groups. And it turns out that people don't really want that. And in particular, it's not that they don't want the savings account, and it's not that they don't want the dollar. It's they don't buy the underlying technology stack, because the first thing they would ask me is, oh, blockchain. So is this Bitcoin? To which my immediate point as someone who started in the Ethereum world is, well, no, what can you do with Bitcoin anyway? It's just like an asset. No, it's not Bitcoin. And people would just turn off. And so there I started seeing, I said, wait, there's a tremendous value in literally just being built on the Bitcoin network. Forget the concept of trustless layer twos and protocol innovations. No, just the idea of building a product and linking to Bitcoin. For most people, at least in Central Asia, and then with other startups I found in LATAM and in other parts of the world, it was the same deal. There's a value to just the recognition of Bitcoin. Everybody has an opinion on it. Everybody from random person walking in the middle of the some kid in the streets in some part of the world to the investment banker in Manhattan, right? Everybody knows Bitcoin. And so for me, when the opportunity came up to join Marathon and advance blockchain adoption in a number of different ways, it was a no-brainer. It was that, well, this would have saved my earlier startup. Let me make sure that others don't make the same mistakes I did by building on lesser networks, to put it bluntly.
I love that a lot. That makes a lot of sense. And for me, I guess my journey, I went to Bitcoin Miami 2021. And I first started seeing like stacks and a few other things getting built on top of Bitcoin that were really interesting, and would love to kind of dive into that. Like, are there layer twos? Is there DeFi being built on Bitcoin that's usable today? What kind of is being built on top of Bitcoin now? How has it evolved over those past few years?
Yeah, I have done a lot of looking into this and a lot of research, and I should preface my answer with saying a lot of my views might be very contrarian and people might not necessarily see eye to eye. But, to put it very, very directly, I think a lot of Bitcoin DeFi today is horribly unimaginative. And what do I mean by that? I mean unimaginative in the sense that the vast majority of projects that I see coming out and projects that, we have to evaluate internally within Marathon, it's a lot of trying to bring over exactly what's on ETH onto Bitcoin. And not only is that unimaginative, I think it's poor product sense, because the thing about most retail DeFi is you need liquidity, right? The only way to drive up those tokens, the only way to drive up volumes, the only way to drive up fees is if there is liquidity. And Ethereum, the base layer and also the layer twos just have so much liquidity, so many network effects that it's very hard to unseat that. And so, just approaching it, not even from a crypto native lens, just looking at it as a business person, why would you try to unseat the incumbent in the incumbent's own game? right? So I think where Bitcoin DeFi should head in the direction of is finding ways and finding use cases where we are betting on the uniqueness of Bitcoin, not just trying to replicate success in other places. I know there's a theme in Bitcoin that's been going way longer than I've been involved, but that, Ethereum is the test net for Bitcoin. Well, I think it's a form of a test net, but in the same way that when you're launching a product, the test net ends up being very different from what you bring into market, I think we have to have that same thing in mind. So what do I mean by that? A lot of projects make press because they poured over, DeFi protocols like Uniswap, or maybe they make press because they replicate AMM pools and other ecosystems. Look, power to them. In a world in which Bitcoin layer 2 succeeds, Marathon succeeds, and we're always going to be in support of different efforts that try to advance the utility of Bitcoin. To put it in a more mercenary way, we hold a lot of Bitcoin, so everything that advances its utility or increases its press helps us, no doubt about it. But I think the next evolution in Bitcoin has to be, and Bitcoin DeFi in particular, has to be a place where, again, Bitcoin is uniquely required, uniquely demanded, and a lot of themes that we can we can double click into in there, but it has to be unique, right? We have to find differentiation. We can't just copy what other ecosystems have done.
That makes a lot of sense. And a lot of people complain about like Bitcoin's how slow the network is for confirmations and things like that to build DeFi on top of it. What is your response to folks like that say that it can't be built on Bitcoin?
Yeah, I'd say that's categorically false. I mean, there's a number of ways that you can actually build a layer 2 while at the same time guaranteeing faster confirmation times and lower fees than what the Bitcoin network involves. I would advocate for layer 2s that involve something called merge mining, which, by the way, is a concept that is long predates me and 99% of Bitcoiners out there. But it's simply the concept that you can set up a piece of mining hardware to mine several chains at once, and to, in particular, mine Bitcoin using Bitcoin's consensus, but at the same time also be mining layer 2 side chains across the network. And I think this is really a piece of technology that doesn't get a lot of press, but needs to and will, I guarantee you on that front. And I think that's when you actually start developing a layer 2 ecosystem that, well, first off, can work much faster and at a much cheaper rate than Bitcoin. Think of it this way. If you are mining multiple chains at once, not everything has to have Bitcoin's same level of difficulty, right? That's the reason why Bitcoin blocks take a while to confirm, right? Block every 10 minutes. What is it? If you lower the difficulty, you can now get, 10 blocks in 10 minutes or 20 blocks in 10 minutes, whatever you'd like. And there are ways to create layer 2s where you also have a hybrid consensus model where you're not just mining, but maybe you have an element of, proof of authority involved, or some other sort of consensus mechanism that gives you better fork resistance, that maybe lowers fees in the process, that maybe creates a fast lane for transactions. Nothing of what I'm saying here is revolutionary. All of this is stuff that the community knows very well. It just really takes a team to put it all together. But what I mean to say, to simplify the answer, yes, you can very well have a Bitcoin layer 2 that inherits a lot of the appeal and security of the main chain while still being more scalable. In other words, faster, in other words, cheaper. So that is entirely possible. It's just we're waiting on the team to crack that egg.
To crack it. I love that a lot. And like, what do you say to folks that like the discussion between proof of work and proof of stake? What do you guys say there? Like, why continue with proof of work? Why is that better than proof of stake?
I think a number of reasons. And Marathon, the most important one, I think, is actually sustainability. And yeah, maybe getting like darts thrown at me with people who listen to that and don't know much about it. And I was one of those people, actually. Like, shortly before going to Marathon, like joining Marathon, it's actually funny, on my Twitter, I ended up deleting the post. I was like, oh man, I hope my new employer doesn't find out. But I got into this Twitter battle with a random person about the sustainability impacts of proof of work. And so I think I might have mentioned this in my intro, but I used to be a climate researcher in China. And so I know quite a bit about what it takes to, the challenges of climate research, of the importance of doing it, and of course of the importance of reducing our energy footprint. All of that is extremely clear. But something else that I know from my climate research days is the issue with curtailment and the fact that renewable energy resources don't always operate at 100% capacity. To put it in layman's terms, the sun doesn't always shine and the wind doesn't always blow. And when it does, it doesn't mean that everybody's turning on their lights at home. And so something beautiful about proof of work that I've now come to learn being a part of Marathon, and of course, diving more into Bitcoin, is that you have the opportunity to essentially use energy, stranded energy, use energy that these renewable resources would otherwise not be selling to the grid, and actually help the financing, help the ROI on these renewable energy projects. Let me put it more simply, right? I am selling you an asset and I'm telling you it's only going to be 80% useful on average across its lifetime. Let me change that narrative and say, no, it's going to be 100% used and I can guarantee it without an ounce of doubt. That's the Bitcoin mining difference, right? When that's something that Marathon has pioneered in a number of different ways. And, we've talked publicly about a number of these different approaches, and we're going to be talking about more upcoming. But I think from the sustainability lens, it's something that when I talk to my old climate buddies, they first scoff when I say, yeah, Bitcoin's actually climate friendly in many ways, or it can be at least. Obviously, it takes companies like Marathon who are, actually focused on the topic to achieve. But no, I think most people end up agreeing when you really dive into the details. Now, that's one part. But if we're looking at it from less of an environmental lens and more of a protocol lens of the adoption side, I think proof of work is, first off, it tethers the underlying crypto asset to something real, right? I find proof of stake. I had a friend, a former colleague of mine. We were talking in Dubai a couple of years back, but he'd mentioned this thing. He was like, you know what? I was thinking about proof of work the other day, Jullian, or proof of stake rather. You're basically banking on the network being secured by the asset, by the native asset itself, whose value is driven by speculation, and only with increasing speculation can the network actually be secured. It's tautological. And so obviously if the native asset itself is something that's immutable and its value is going to be enshrined in the public consciousness, of course proof of stake matters, right? Like a gold bar, for example. No way you're going to just get humans to stop valuing gold bars. But a crypto asset, come on, like that goes up and down in value like nobody's business. And every time it goes down in value, the network becomes all that more insecure. And so look, proof of work, yes, it requires a great amount of energy. And obviously the equipment that it takes to mine is very expensive. But at the end of the day, it is something that I believe ends up being a lot more decentralized and tethers the underlying crypto asset's value to something real, i.e. the hardware, i.e. the energy. In many ways, Bitcoin can be seen as a proxy for energy costs. There's obviously a lot more on the top line of it, but at a minimum, if somebody is plugging in a miner and paying that massive electricity bill, then I guarantee you they see a lot of value in that Bitcoin. And if they see a lot of value in it, they're being driven by market forces. And so you basically have an exogenous reason for caring about that cryptocurrency, as opposed to an endogenous one, which just kind of in the economics world, that just blows the model to smithereens, right? You need to have something real behind it all.
That makes a lot of sense. And digging into Marathon a little more myself, I was excited to learn that you guys are kind of like investing in ASIC hardware development and stuff like that. And that's getting decentralized in itself, I think is very important.
I think the more that we can do to popularize this hardware, the more that we can do to lower the cost of it and to make it more accessible, that definitely helps the Bitcoin network.
That makes a lot of sense. And for those out there, have you ever heard of like Cardano and the extended UTXO model? What are your thoughts on changing that model for UTXO and all that? What are your thoughts on that style of blockchain versus like an Ethereum or so on?
Yeah, I look at it very practically. I think at the end of the day, the Cardano team is filled with geniuses, and it's often pitched as the blockchain for the future, the unhackable one, the one whose scripting language and whose smart contract programmability is at the forefront of our insight. And I don't deny that. Look, I'm at the end of the day, I'm not a scripting expert, and I'm certainly not an expert in building and developing applications on Cardano. But what I will say is that if you look at most reports on the knowledge of blockchain development, of what developers are most familiar with, the vast majority know Solidity. I mean, I wouldn't say it's not 90%, but it's definitely in the order of 55 to 60%. Yeah. So if we're talking a new layer 2 and you're thinking about what to build and what scripting language to leverage, the most important thing you can have as a protocol is developers. You need contributors. You need people to be building apps on top. It's oftentimes, layer 1s, layer 2s, they forget who the customer is. The customer is not the user. The customer is the developer who will then go and find the users, right? And so I think at the end of the day, my view on it is, for better or for worse, Solidity and EVM compatible chains, they're winning the game. And so I think for a lot of institutions we speak to and a lot of different adopters, a lot of different developers, it's common sense. These debates between the UTXO model, the EVM, they don't have strong opinions over it. They just build on EVM, and that's just that. And so I think it makes the most sense just to build upon network effects. We can't port over the liquidity necessarily of ETH, but I think Bitcoin can do a lot to replicate that ease of development on ETH. Yes, it comes with its security trade-offs, and yes, it's not the most efficient language, and a lot of people who know Solidity and who know EVM style contracting have issues with it. But at the end of the day, it's what's easiest to find talent, and it's what's easiest to create like that community of contributors. And who knows, maybe the community ends up taking it in a different direction, and we end up adopting the Cardano standard, and power to them. But I'd prefer to just follow what most developers use.
I like that a lot. Like there's a pool of developers out there on EVM, and I didn't even know like you can do EVM development on top of Bitcoin and a layer 2 and everything
Of
like
course.
that. You can bring over those Solidity developers, and so I had no idea that was even a thing. So that's really cool to learn.
So I would like just to further on that, the challenge with layer 2s that I find is that they conflate the consensus with the protocol. And so what I mean by that is the protocol, the scripting language, right? That can be EVM compatible, but that doesn't mean that you need to copy over Ethereum like consensus. And it's a curiosity I have with a lot of layer 1s that come out, and a lot of layer 2s as well, is that they basically bank on new forms of consensus winning the day, but you're doing too much at once. A stack is hard enough to create. A stack is hard enough to innovate. Creating programmability standards, smart contracting capabilities, making it secure, that's multiple PhD dissertations worth of work. Consensus is a question of incentives. And so I wouldn't necessarily yet call me, though I'm inching toward it, a Bitcoin maxi, but that's why Bitcoin maxis exist. Actually, it's because that incentive model is so robust and has been so dynamic across time that it just makes sense to build stacks on top of it. I think Celestia and some other new projects talk about this, about like composability, right? That you draw on consensus here, you draw on a stack from here, you draw on the application. That's what we should do, but the consensus layer has to be Bitcoin. I think it's just very obvious to me. I mean, obviously that's easy to say coming from a Bitcoin miner, but I think in terms of the consensus model, it's the one that has the best proof. So we should just plug it in, right? It's easy to build these things on top of each other. That part isn't the challenge.
Yeah, and I think that's like the misconception a lot of people like myself have out here, that it's like the thought that I have, and I think the narrative pushed on folks like myself, is it's impossible to build on Bitcoin. It's just digital gold. You can't do these things. And here we are talking about layer 2s and DeFi being built, and would love to get your opinion on ordinals and things like that. It seems like even NFTs are coming over to Bitcoin. So it's like, I can see why it's like, why start a whole other consensus model and kind of replicate all that when we have one that's here and has been battle tested now for well over a decade at this point. Almost, we're going on 2 decades now. So
exactly, right? No, it's and look, I would say the misconception, it's something within Bitcoin that people are just flabbergasted by, but I get it. Look, I had that same misconception. I'd say, like, if you talked to me 2 years ago at this point, I probably would have no idea that was even possible. To me, and I get the ETH mindset here for a lot of new developers and a lot of new entrants or new like blockchain users, that Bitcoin is just kind of like, it's its own thing. It's like an irrelevant thing. You just don't even think about it. Right. And a lot of thought leaders in ETH, I don't think about it either. So no, there's a lot of misconceptions to be done away with. Now, on the topic of ordinals and whatnot, I think this is the clearest example that there's just demand just bursting at the seams. Right. I think this is the best example of it, because ordinals, look, as a technology, and I'm not saying anything that's going to offend anybody. Anybody who's an ordinals builder knows this. It's an incredibly inefficient technology stack. It's ultimately not natively, it's not a native Bitcoin feature, right? And a lot of people in Bitcoin take issue with it, but I think both sides would agree to that it is a workaround in many ways. It's Bitcoin can do X, and ordinals is an attempt to force it to do like Y, Z, A, B, C, D, that's the whole point of it. I respect the community massively, because at the end of the day, they are trying to innovate a stack that is very difficult to innovate. But I think ultimately it is proof that a layer 2 is needed. Right. And a decent layer 2. That's the thing. Every new layer 2 out there, we're going to bring in ordinals demand. We're going to bring in ordinals demand. You forget why ordinals exist. Ordinals don't exist because of the efficiency of the stack or because the limitlessness of the potential. They exist because it's on main chain, because ordinals inherit the appeal and the security of Bitcoin. Right. And so any layer 2 that's created, anyone that goes to market, you have to be very discerning and see which ones are actually building a protocol that benefits and inherits those security and appeal properties of Bitcoin. Because if they don't, they're not going to capture ordinals demand. Ordinals demand comes from a desire to create new things on Bitcoin. And so, yeah, I think it's the best proof that we need better layer 2s, if we're being honest.
That makes a lot of sense. And all this traffic of ordinals and like DeFi and layer twos getting built, like how does that affect fees, miners' fees and the halvening coming up? Like it's really important to have this traffic going on, correct? And this innovation.
Right.
How is that how does Marathon see that? How does it affect fees? I guess have you guys seen is a majority of the revenue coming in from block production, or is it starting to be ordinals causing a ton of fees and actual transactions happening? What are you guys like seeing there?
Yeah, I mean, look, 2023 was a good year for us and most other miners in large part because of ordinals. I think I've read some numbers out there that, as many as at some points last year, 80% of transaction fees were coming from inscription transactions. It's a high share. I mean, it fluctuates, right? Like the market ebbs and flows.
Yeah.
There was a point last year where it was almost zero. There was a point where it was 80, 90. It just depends. But I think it's undeniable that actually at the beginning part of, and maybe continuing to some extent till now, but I think stronger in January, there was definitely an inscriptions craze. A lot of people trying to mint BRC20s, a lot of people, creating new collections with ordinals. You have a lot of new projects coming out like runes, that they're going to have a big airdrops. And it's any number of different innovations. I would classify ordinals as, broadly speaking, it's like an inscriptions community, with ordinals being one channel, but many other channels existing. And because of that, you really have like a pretty vibrant ecosystem that for miners has been incredible, because the more that people transact on Bitcoin, the more transaction fees we make. Simple as that. And so, yeah, we're part of what my job comes into play is how can we make that demand more sustainable? How can we keep it going, not just into the next hype wave, but many, many cycles beyond that? And I think there are many ways to. We just got to be creative about it.
What type of alpha can we pull out here? What are you guys working on?
Ooh, yeah, well, we're going to announce very, very soon. I'm excited to, but I think for most attuned listeners to what I've said thus far, I think it it doesn't
Yeah.
take a genius
Is it
necessarily.
it seems like a lot of infrastructure needs to be built out first, like the layer two. Like
Yeah,
it sounds like a lot of from our discussion here, a lot of the artists have moved in. You see things like ordinals happening and people experimenting, and now folks like yourself are coming in and really understanding what the fine-tuned infrastructure needs to be built on top of Bitcoin to actually bring in real, decentralized finance or NFTs, as you will, on Bitcoin and things like that. Am I kind of hitting on the spot there? Or?
I think, look, it's a big focus we've had for the past year is really taking an objective look to the state of Bitcoin DeFi and Bitcoin infrastructure, broadly speaking, and seeing what's needed. And that's really where my role has come in handy. And what I've enjoyed about this opportunity is really being able to come at it with, I know blockchain technology decently well, but when I started this job, I didn't know Bitcoin all that well. And so I was really approaching it with like, a kid's wide eyes, so to speak. And I have a background in consulting, so I know how to like figure out my way around an industry in a short amount of time. But yeah, I think you hit it spot on. There's a lot of infrastructure that needs to be built. That being said, I also think there's a lot of use cases that need to be developed out and really brought to market. So look, at the end of the day, I think infrastructure can only get you so far, right? All right, you have great roads and highways, but that doesn't mean you have an amazing city around it. And so the way I think about it is, the best way to build out this ecosystem, and I'm not even just talking about Bitcoin. I mean, blockchain, broadly speaking, other chains as well, is think about the infrastructure and make something that is, roughly at par with what, other verticals might offer. In the case of traditional finance, we're not going to reach the level and scale of Visa tomorrow, but, try to get to somewhere that's somewhat comparable, and then really start building out the use cases, right? Because that's the moat Visa has, and that these different fintech companies has. It's not on some like absurdly revolutionary technology, although their technology stack is pretty impressive. It's mostly on the demand, right? People want Visa credit cards, right? Interchange fees are as common as ever, and Visa has incredible relationships with a bunch of different banks. That's the sort of stuff that we need in blockchain to develop, right? We need better relationships with the drivers of adoption, with institutions, with the users themselves. We need to simplify the user experience. I'm just, I'm here just copying and pasting what I read a lot out there, but at the same time, it's something that I've seen plain and simple. I get pitched a lot of new app ideas, and when I see them, the first question, okay, let's see the user experience, right? Let's see the design. And man, I mean, some teams, they hemorrhage money into trying to develop a design that they think will actually land and reverberate within like retail audiences, non-crypto audiences, and it just flatly is not the case. And then if on top of that you have this like half-baked infrastructure, well, then you're never going to get adoption. But if you have decent enough infrastructure that's almost at par, and some use cases that are compelling, again, that uniquely demand blockchain, and in the case of Bitcoin, uniquely demand Bitcoin, you're golden.
That makes a lot of sense. I want to ask, I'm skeptical of layer twos, even in my Ethereum side of things, because I don't know which one's going to win, and there seem to be a lot being built out. And it's kind of like, where do I want to bridge my funds or do all these things, or do I just want to stay on the main chain? I hear a lot about the Lightning Network on Bitcoin and things like that. Are there other layer twos out there? Which one do you think is the most used and things like that? And why are there different ones for different use cases? Kind of what are layer twos on Bitcoin at this point?
Yeah. So look, I would say like you hit it on nail on the head with the last point. It depends on the use case, right? I think in the case of the Lightning Network, and obviously it's a challenge calling what is a layer two, what is not. But let's just say, different Bitcoin scaling solutions. It's in the Lightning Network, micropayments is the big use case. And, there are a number of reports in the past few months of some increased adoption, particularly like with gaming and social media. Like if you're setting up a social media channel and you want to stream payments from your audience as you're talking, Lightning is definitely the way to go. In the case of Stacks, you have, Clarity, there's their programming language, they have smart contracts, there's an ability to like create and deploy AMM pools, for example. And, there are a number of DeFi companies that are doing that. On the case in Liquid, you have confidential transactions. There is quite a variety of Bitcoin layer twos. But I mean, if you ask me honestly, and look, none of these teams would deny this, it's not comparable with what you see on Ethereum layer twos. And the interesting thing is I feel like within the Bitcoin community, a lot of layer twos they go through a lot of pains to set up a network that is decentralized, and they really try to like echo these themes that you see on the Bitcoin main chain. Whereas in the case of Ethereum layer twos, they just build things that work. Nobody's claiming that Polygon is some super decentralized network or optimism either, right? They have the sequencer dependency. And at the end of the day, people just don't bat an eye to that because it's cheaper and the marketing is good and their BDs are out there and talking. So I think that's a shortcoming of Bitcoin, is that it could do a much better job at getting the message out there and just building things that work. All right. Like let's ignore the philosophy for just a second and let's prove out some of these use cases that we believe might actually work. Start from there. So yeah, that's the landscape of Bitcoin layer two. I would say the most used though of any of the layer two technologies, and again, is it called the layer two? I'm not sure, is Ordinals by and large, right? Like just listen to what people on these other layer twos in Bitcoin talk about. They talk about Ordinals. They talk about pitching, bridging in the Ordinals and taking in that demand and onboarding those users. Everybody's talking about Ordinals. So if you ask me, like that's really where the heyday is at the moment. I don't think that's going to stay that way. I really think that look, at the end of the day, Ordinals are not unique. This is actually like a funny story that, I'm peddling as my own, but it's not. My technical counterpart at Marathon, who's been around Bitcoin since like 2012, 2011, he always says, but Ordinals aren't new. In the inscriptions technology, the approach is new. The exact use cases, however, are not, right? The attempt to make Bitcoin linked NFTs, Bitcoin art, generally that was, I think the old term was Bitcoin art or Bitcoin artifacts. I'm forgetting the exact term, but this has been made before. But why has all of these other attempts at creating Bitcoin linked tokenization, asset issuance, non-native, of course, but what have all of these other attempts faltered in? It's whenever there's a bull run. The second there is a bull run, main chain fees skyrocket, and you end up getting a lot of these use cases priced out. In fact, back in December of last year, there was a brief time where we thought there was going to be a bull run. Fees were through the roof, right? Marathon was winning these absurd blocks with massive, massive fees attached to them. And what ended up happening is a lot of the Ordinals community that I interact with on a day-to-day basis was telling me things like, I can't mint my new collection. I'm just waiting for these main chain fees to drop. And they ended up dropping. Hoorah. Everybody was saved. But just wait, the next bull run, and who knows, maybe we're entering it right now. That the first thing to go is anything that's non-Bitcoin, right? Because you're transacting an NFT that's worth $100, but the transaction fee is worth $100. You're out of the business, right? It's simple as that.
So, like, what do you say to that in the future of the bull market and fees kind of going crazy? Like, how are fees going to get kept in line on Bitcoin? Is that the beauty of the layer twos and them just kind of driving that consensus back to the layer one?
Yes. Look, I think fundamentally fees on the main chain, it's impossible to predict. There's
Gonna go
some
higher.
thought leaders who say it's, trending downward and others who say it's trending upward. But I think everybody can agree they're not stable. So it's very hard to predict where they'll go in the future. And the reality is that I think one of the killer use cases for Bitcoin is institutional demand. Bitcoin is an asset that even the US regulatory bodies view as a commodity. So it has that regulatory clarity, it has that resilience, it has that security. If you pitch a non-crypto native business on any sort of blockchain innovation and you back it up with Bitcoin, what I've seen out in the field is that actually lands a lot better than all other forms. And so what do I mean by that? Why do I say that? Well, look, an institution isn't going to use a blockchain that has variable fee structures and that one day they might just be totally, totally clogged in terms of main chain fees that they can't do anything for like a week. That's not how institutions work. They want predictability. They want predictability in the resilience of the stack. They also want predictability in the day-to-day use. And so that's, I think, where layer twos can really make a dent, is bringing on that institutional demand that wants that Bitcoin appeal, but doesn't want that Bitcoin user experience. Because, the Ethereum layer two world, it provides a superior institutional experience. But, what's really underlying that, I'm not sure, right? Like, is this layer two going to exist for the next year? Well, that also dissuades institutions from participating.
That makes a lot of sense. I have a lot of interest when it comes to like DeFi and borrowing and lending and like, being able to like leverage my assets similar to, I got my start in real estate and having a rental property and being able to pull a mortgage on that and things like
Right.
that. Do you see like a lot of DeFi getting built on top of Bitcoin and layer twos? Are there places to leverage the coin you hold safely, not like 50x degen trading leverage, but like the Aave of Bitcoin or the MakerDAO of Bitcoin? Is there something like that?
There are some DeFi teams that I think are trending in that direction. But it's like I said before, I think at the end of the day, if the focus is trying to port over Aave, you're never going to win. You're never going to unseat. Well, maybe not never. Never say never. Things can change in a blink of an eye. But it sounds to me like a poor business approach, a poor strategic approach to try to unseat an incumbent at the incumbent's own game. So I think, look, are we going to see some form of leverage of different assets and some sort of lending and borrowing on Bitcoin? Absolutely. But my sense is that it's going to be different use cases than what you see on ETH, on Solana, et cetera. And in particular, I think for the highest value assets, the highest value leverage, the highest value DeFi, that's what needs to live on Bitcoin. Because think of it this way, and I was in Korea last year and was chatting with a Lotte team. They're building like a metaverse, and they were talking about building these metaverse skyscrapers. And so the idea came to me. I thought, well, all right, the first floor, the second floor apartments in a metaverse skyscraper, that can be on like Solana or whatever. It doesn't matter what chain. Just make it cheap and make it quick. Chain goes down, who cares, right? At the end of the day, like it's a question of scale. But the penthouse, where do you want to tokenize that penthouse? And if you create a security and then you trade on top of that security that's backed by collateral of the penthouse, well, you're not going to want that on so many, any chain, right? You're going to want that on Bitcoin. And so to your point, I think you could see a world of a lot of vibrant DeFi, but I think the best type for Bitcoin is the type that people are especially averse to losing, right? Because if you're averse to losing it, if you're afraid, if you're risk averse, Bitcoin is the chain for you. I mean, if you're getting into blockchain, broadly speaking, you probably have like a decently high risk tolerance, but everything's a spectrum. And I think Bitcoin is, it is and should be continue to be seen as the safe haven.
That makes a lot of sense. And like, you don't need to like, buying gaming skins and things like that don't need the ultimate security of Bitcoin. Exactly. And you probably want something faster. Whereas, tokenizing my home and making sure the title to my home is clear, I probably want the security of Bitcoin for that specific transaction. So that makes a lot of sense.
I think at the end of the day, blockchain. Sorry, keep going. My bad.
No, go ahead.
No, I was just going to say blockchains are like payment networks. It's all about trust. And if you have trust in Bitcoin, then people are going to use it. Simple as that.
That makes a lot of sense. Yeah, absolutely. What do you see like the future for Bitcoin in 2024? Like, are there any things that you're excited for on the horizon? And it might not necessarily be 2024. It could be further on, but things that you see in development for the chain that excite you?
I definitely think layer two is a massive theme. There are so many different projects coming out with a lot of compelling designs for layer two networks. And it's like I said before, power to everybody. At the end of the day, a few of these are probably going to catch fire, and those are going to be the ones that reshape Bitcoin, and we're all about it, right? At the end, it needs more use cases. We can't just have the digital gold value proposition. I think that's my biggest prediction, is that the digital gold value proposition is going to remain a primary driver for Bitcoin adoption, but I think it has to, and it should, and it will end up encompassing other things as well. So that's my biggest take on it. I think, what types of DeFi do you see? What's going to be the layer 2 that wins the game? That, man, I stopped guessing political outcomes after I was wrong about Brexit, Trump, and like everything in between. So I give up. I'm not some political theorist, but I would say Bitcoin is equally as unpredictable.
I'm right there with you. Where do you go to learn about this stuff? Like, where do you go to get information? Are you like hunting down CoinDesk? Are you in Reddit deep forums? Like, where do people go to find out more about what's going on in the ecosystem?
Yeah, that's, I think that's part of what I just personally have an interest in, and this is beyond my role at Marathon and whatnot, is really much better Bitcoin education. And I think there's a lot of cool social impact founders in LATAM that I've met who are, running Bitcoin schools and like talking about blockchain to everyday people. I love that. And, my background in education, I think it won't be long the day until you start seeing me kind of speaking on these podiums about like blockchain adoption and about the cool stuff that Marathon is going to create and release. But yeah, I mean, up to now, really.
That at Rare Eva.
Yeah,
exactly. Gotta get you on the podium there.
Without a question, without a doubt. No, definitely. But yeah, I'd say like for me, I mean, look, I like to keep on some newsletters. I'd say some are better than others. Token Dispatch definitely gives like a really good rundown of what's going on. Can be a little bit hyper technical sometimes, but if you click on the articles and links, I think it makes a lot more sense. Honestly, I loved in terms of learning the inner outs of blockchain. I think like some layer 2s on on Ethereum do it very well. Polygon, for example, Polygon University, I think explains things very well. There are some teams in Bitcoin, actually Xverse, it's like the MetaMask of Bitcoin, so to speak. They have a lot of cool articles that, actually my brother is getting involved in blockchain, and, he's a developer, but anyway, I've been sending him a lot of articles that have come from there. But beyond that, yeah, Reddit forums are good. It's really a medley of a lot of different sources. I'd say with like Bitcoin and blockchain, there's no one source of truth. It's really hard to just find one place.
That's for sure. Is the Bitcoin community as strong on Twitter as it seems like the ETH community lives on Twitter only?
I'd say so. Yeah, I definitely think like crypto Twitter, Bitcoin Twitter in particular, you get a lot of great debates. I mean, that's something I love about the Bitcoin community. I should be on Twitter a lot more than I currently am, but the times that I do go on, my team tells me, Jullian, you have to read this thread. Some of the wild debates you get on Bitcoin threads are just amazing. And Bitcoin conferences too, like people really get into the nitty gritty, and I love it. I think there's a lot of high, like top tier thinkers really getting into the meat and potatoes, as I mentioned earlier, about protocol developments, about how to redesign incentive models. I think you really get a lot of that at Twitter and at events.
I love that. Are you going to be at the Bitcoin conference? I believe they moved it to Tennessee this year.
I am. Yeah, Marathon's a huge. We're a huge supporter of the Bitcoin conferences. So I'll actually probably be because there's one in Nashville, there's another one in Hong Kong, and then I think there's a third one later in the year. But anyway. I'll most likely be at all of them. So.
When's the one in Hong Kong?
I think it's May 8th to 10th or 9th to 11th, but it's that first week of May, or like bridging on the second week. Yeah.
I have to put that on the travel schedule. I appreciate that. That was a selfish question there.
Absolutely. And actually their whole focus for that one is going to be Ordinals. So yeah, you definitely should. I think that's going to be a good way. Look, one thing I didn't mention about the Ordinals community is it is extremely strong in APAC, like in Asia Pacific. That's the place to go. So I'd say if you want to really talk to some users and some great teams, yep, that's where it's happening.
Head out that way. That's one of our goals in the next year, is to head out in that direction and kind of explore a little bit. We've done a lot of Europe. We did Dubai several times in the past year. So, but we haven't made it out to the Southeast Asia region. And that's definitely, there's a lot of action happening out there. Token 2049 in Singapore. I had the most FOMO ever sitting at home. So definitely want to make it out there. I appreciate it. Anything you think we've missed? Were you there? Did you
Nothing. No.
Token 2049?
I did. Yeah. I loved it. No, I think it was my favorite event last year by far.
It looked like it online from everything I saw. I was like, wow, we cannot miss this next year.
Yeah,
It's a must go. So
I'll see you in
yeah, I
2024 for it.
absolutely. I appreciate the time today and taking a moment to discuss all this. I think it's some really interesting information that not a lot of people know about that you're able to discuss with us, and would love to have you back on anytime when you guys are making announcements of any releases or anything you're doing. Would love to have you on and continue the conversation. And I'm sure after this gets posted, I'll have a bunch of questions from the community to continue on maybe in the next episode.
Absolutely. No, more than happy to continue on. And yeah, I think I'll put it this way. I think March is going to be a big month. So yeah, expect to see me back soon.
Love that. I appreciate it, Julian. Thank you for the time and look forward to having you back on later.
Yeah. Thanks a lot, Rand.